Before there was a Federal Reserve, before the White House bailed out Wall Street, one man was the lender of last resort. His name was Morgan, and his financial empire was built on 5 timeless secrets, secrets still used today to separate the billionaires from the millionaires. This isn't just a history lesson. This is a blueprint for how to think about money, power, and influence. These are the 5 money secrets from the House of Morgan.
The forging of a dynasty. To understand the sheer scale of the Morgan Empire, you first have to get the world that created it. The story doesn't kick off with the iconic John Pierpont Morgan, but with his father, Junius Spencer Morgan. In the mid-19th century, London was the undisputed center of global finance. An ambitious American banker named George Peabody had built a powerhouse firm there, basically acting as a bridge for European money to pour into a rapidly industrializing United States. With no heir, Peabody made Junius Morgan his partner in 1854. 10 years later, the firm was reborn as J.S. Morgan & Co. Junius was a master of old-world finance, a world built on relationships, trust, and quiet handshakes. He taught his son, J.P., that finance wasn't just about numbers, it was about power. And the ultimate source of that power? European capital. Young J.P. wasn't shipped off to Wall Street to learn the trade. He was sent to Europe, to Germany's prestigious University of Göttingen. He came back to America fluent in the language of global money. In 1871, J.P. Morgan set up shop in New York as Drexel Morgan & Co., serving as the American arm of his father's London machine. At that time, America was a financial Wild West. The post-Civil War boom was creating mind-boggling wealth, but it was all built on a foundation of pure chaos. Railroads, the backbone of this new economy, were a complete disaster of reckless competition, overbuilding, and spectacular bankruptcies. Industries had no structure, and the whole financial system was prone to terrifying panics that could vaporize a fortune overnight. This was the world J.P. Morgan looked at, not with fear, but with a hungry eye for opportunity. He saw chaos and imagined order. He saw wasteful competition and imagined profitable stability. Morgan believed that competition was a sin, and he made it his life's work to destroy it. His method was so effective it earned its own name, Morganization. He didn't just finance companies. He seized control of them, restructured them, and forced them into massive, efficient empires. He would famously gather warring railroad barons on his yacht, the Corsair, and refuse to let them ashore until they agreed to stop fighting and start cooperating, under his direction, of course. His power became almost absolute. Twice, the United States government itself was on the verge of going broke, and twice, it was J.P. Morgan who bailed it out. In 1895, during a crisis that drained the country's gold reserves, Morgan put together a syndicate to lend the U.S. Treasury more than $65 million in gold, saving the nation from default. Then, during the devastating panic of 1907, with no central bank to stop the meltdown, Wall Street turned to one man. Morgan summoned the city's most powerful bankers to his library, locked the doors, and practically forced them to pony up millions to save the failing financial system, single-handedly stopping a total economic collapse. He was more than a banker. He was a force of nature, a one-man Federal Reserve. But how did he pull it off? How did one man get so much power he could hold the fate of the entire American economy in his hands? It wasn't luck. It was a philosophy, a set of principles that became the bedrock of his empire. And the first secret is the master key to his whole strategy.
Secret 1. Control the entire stack. Vertical integration. The first secret of the House of Morgan is to think way beyond a single transaction. Morgan didn't just want to finance a railroad. He wanted to control the entire system it was part of.
Today, we call this vertical integration. For Morgan, it was just common sense. He knew the real power and profit wasn't in lending money to an industry, but in owning and organizing the industry itself. His favorite laboratory was the American railroad system. After the Civil War, railroads were built with wild abandon. Competing lines ran parallel to each other, torching money in vicious price wars that drove them all toward bankruptcy. Investors were terrified. Morgan saw the chaos and smelled an opportunity. Using his access to deep pools of European money, he'd step in and take control of the failing lines. But he didn't just refinance them. He forcibly merged them, axed redundant routes, put his own guys on their boards, and controlled the prices they charged. This Morganization process turned a fragmented, unprofitable mess into a stable, powerful, and wildly profitable system under his command. At his peak, Morgan controlled about 5,000 miles of American railroads. He used this same logic on everything he touched. When he decided to fund Thomas Edison's revolutionary work in electricity, he didn't just write him a check. He engineered the merger of Edison General Electric with its main rival to create a new corporate titan, General Electric, a company he controlled. This new giant didn't just sell light bulbs. It controlled the power plants generating the electricity and the grids that delivered it. He controlled the entire stack. This principle is about seeing a business not as a product, but as a system. It's asking, what comes before my business and what comes after? How can I control the supply, the production, and the distribution? Modern titans of industry still swear by this rule. A company that makes smartphones also builds the App Store, controls the payment system, and designs the chips that power the device. They're controlling the entire stack, just like Morgan did over a century ago. It's the ultimate defensive moat, turning a simple business into a fortress.
Secret 2. Kill competition with consolidation. J.P. Morgan famously declared, "I don't like competition." This wasn't just a personal quirk, it was the second pillar of his financial gospel. To Morgan, competition meant chaos, waste, and unpredictability, all things that were terrible for business. His solution was simple and brutal. If you can't beat your competitors, buy them. Then merge them into one giant entity that you control. This strategy hit its absolute peak in 1901 with the creation of U.S. Steel. The steel industry back then was dominated by Andrew Carnegie's hyper-efficient operations. Carnegie was threatening to build new plants that would trigger a price war, threatening to destabilize the whole sector and the dozens of railroad and manufacturing companies Morgan financed. Morgan decided the only way to guarantee stability was to eliminate the competition entirely. He went to Charles Schwab, Carnegie's right-hand man, and in a now legendary meeting asked him to find out Carnegie's price. Carnegie, who was ready to retire and focus on philanthropy, scribbled a number on a piece of paper: $480 million. Morgan glanced at it and simply said, "I accept this price." But buying Carnegie was just step one. Morgan then merged Carnegie Steel with a dozen of its biggest rivals, including his own Federal Steel Company. The result was U.S. Steel, the world's first ever billion-dollar corporation, a monster that controlled about 2/3 of the American steel market. He didn't invent steel, but he organized it for maximum profit and stability. This strategy of Morganization was repeated across the economy, creating other giants like International Harvester in agricultural equipment. By combining rivals, Morgan replaced unpredictable price wars with stable, managed prices. He created massive economies of scale and built corporate structures designed to dominate for decades. This secret reveals a core belief of the ultra-rich. Markets aren't just something you participate in. They are something you create and shape. While today's antitrust laws would make Morgan's aggressive moves illegal, the principle lives on. The world's biggest companies still grow through strategic mergers, gobbling up competitors to gain market share, control prices, and build a fortress around their profits. They might not call it Morganization, but they're reading from Morgan's playbook.
Secret 3. Character is the ultimate collateral. In a world obsessed with algorithms and credit scores, J.P. Morgan's third secret seems almost old-fashioned, yet it's incredibly powerful. During a congressional hearing, a lawyer asked what the most important basis for credit was, suggesting it was money or property. Morgan's reply was instant and sharp. "No, sir," he stated. "The first thing is character. Before money or property or anything else, money cannot buy it." This wasn't just a nice-sounding line. It was the core operating principle of his empire. Morgan truly believed that a person's integrity and reputation were more valuable as collateral than any physical asset. In his world, a deal was sealed with a handshake, and that handshake was backed by a man's character. He'd lend enormous sums to people based on his personal assessment of their reliability, while turning away others with vast paper wealth but a shaky reputation. His actions during the 1907 panic show this perfectly. As he orchestrated the bailout, he made snap judgments about which firms to save and which to let die. These weren't based on spreadsheets. They were based on decades of personal dealings. He saved the Trust Company of America because he trusted its leadership. He let the Knickerbocker Trust Company collapse, and many believe it was partly because he held a low opinion of its president, Charles Barney, who was linked to risky speculators. His judgment was the final word, and that judgment was built on character. This principle reveals a deeper truth about real wealth. Morgan understood that finance, at its core, is a human game built on a network of trust. A strong balance sheet is good, but a sterling reputation is priceless. It unlocks doors, attracts the best partners, and builds a foundation that can survive any market storm. In the modern world, this lesson is often forgotten. But the most successful people in business still get it. They know their reputation is their most valuable asset. They build relationships for the long haul, they honor their word, and they understand that in the highest circles of power, who you are is just as important as what you have. Your character is the one asset that never shows up on a balance sheet, but it delivers the highest returns.
Secret 4. Create your own market. Most people see the market as an ocean they have to navigate. J.P. Morgan saw it as a river whose course he could bend to his will. The fourth secret is that the most powerful players don't just participate in a market. They create their own. They don't wait for opportunities. They manufacture them. Morgan showed this most dramatically in his dealings with the U.S. government. In 1895, a run on the Treasury's gold reserves threatened to make the U.S. dollar worthless and bankrupt the country. With the government hours from collapse, Morgan didn't just offer a loan. He walked into a meeting with President Grover Cleveland and essentially declared that the government would default by 3 o'clock unless his plan was used. His syndicate then sold 3.5 million ounces of gold directly to the Treasury in exchange for government bonds, a move that instantly restored confidence and saved the nation's finances. He didn't just play by the rules. He created a new market for government debt when no one else could. He did it again in the Panic of 1907. With no central bank, The financial system was in free fall. Morgan stepped into the void. He organized private liquidity pools, directed money to struggling banks he deemed worthy, and acted as the nation's one-man Federal Reserve. In doing so, he not only prevented a depression, but also cemented his firm's position at the absolute center of the American financial universe. He saw a systemic need, a lender of last resort, and he filled it, reaping immense power in the process. This principle goes beyond crisis mode. It's about funding the future. By backing innovators like Thomas Edison, Morgan wasn't just investing in a company, he was helping create an entirely new market for electricity that would power the 20th century. He understood that financing world-changing technology was the ultimate way to create a market from nothing. He even invested $150,000 in one of Nikola Tesla's projects before pulling out. Modern billionaires have mastered this lesson. They don't just build a better search engine, they create an entire ecosystem of advertising, cloud computing, and mobile operating systems around it. They don't just build electric cars, they build the charging networks and battery factories to power them. They see the world not as it is, but as it could be, and then they find the capital and the will to build that new reality. They don't wait for the future, they finance it into existence.
Secret 5. Build a legacy, not just a fortune. When J.P. Morgan died in 1913, his personal fortune was estimated to be around $80 million. While a huge sum, many were stunned. John D. Rockefeller, by comparison, was worth nearly $1 billion. The news led Rockefeller to quip, and to think he wasn't even a rich man. But this misses the entire point of Morgan's life. The fifth and final secret of the House of Morgan is that the ultimate goal isn't just to get a fortune, but to build a lasting institution, a legacy. Morgan's true wealth wasn't in his personal bank account. It was in the institutions he created and controlled: U.S. Steel, General Electric, and dozens of railroads. Most importantly, it was in the bank that bore his name, J.P. Morgan & Co. He built an organization with a culture and a set of principles so strong that it could outlive him. His son, Jack Morgan, took over, and the House of Morgan remained a dominant force in global finance for decades. The world changed, of course. The creation of the Federal Reserve in 1913 made one-man bailouts a thing of the past. New laws forced the company to split its commercial and investment banking arms, which led to the creation of Morgan Stanley. And yet, the core DNA survived. Today, J.P. Morgan Chase is one of the largest financial institutions on Earth. And while it operates in a world Morgan would barely recognize, its guiding principles are a direct evolution of his philosophy. The modern firm's focus on maintaining a fortress balance sheet is a direct echo of Morgan's obsession with stability. Its official business principles stress a commitment to integrity and building world-class franchises by investing for the long term. This is just the institutional version of Morgan's belief in character and legacy. This final secret is about shifting your thinking from personal wealth to institutional endurance. A fortune can be spent. A legacy, if built on a strong foundation, can last for centuries. It's the difference between being a rich man and being a founder. Morgan chose to be a founder. He built a machine designed to generate wealth and influence long after he was gone. That machine, in its modern form, continues to shape the global economy today, proving that a well-built legacy is the most valuable asset of all. So there you have it, the 5 core secrets that built one of history's greatest financial dynasties. 1. Control the entire stack. Don't just participate in an industry, own the system. 2. Kill competition with consolidation. Replace chaotic competition with profitable order. 3. Character is the ultimate collateral. Your reputation and trust are your most valuable assets. 4. Create your own market. Don't just play the game, set the rules. And 5. Build a legacy, not just a fortune. Create an institution that will outlast you. These aren't just historical footnotes. They are a timeless blueprint for how to think about wealth and power.
They show that true financial dominance comes not from speculating on markets, but from structuring them. It comes from replacing chaos with control and short-term bets with long-term vision. The world has changed immensely since the Gilded Age, but the fundamental principles of building something that lasts are forever. If you loved this deep dive into the mind of a financial titan, check out my video on the Rothschild family next to see how another legendary dynasty built its empire on a different but equally powerful set of secrets.